Good evening, students. Welcome you all once again on the live learning classes organized by Board of Studies of ICAI. Students, today is the third session. Today is the third day, right? And we have started with introduction to Ind AS and roadmap and applicability of Ind AS to various entities, right? On the day one. Intentionally, I have not covered Division 2 to Schedule 3 on the day one. Why? Because today's agenda is presentation of financial statement, which is Ind AS 1, right? And if I talk about financial statements, when we were talking about IGAP, when we were talking about accounting standard era, if someone will tell you that please prepare your financial statement under accounting standard, then for the preparation of the financial statement, Schedule 3 was the only authority. You need to refer Schedule 3 for preparation of financial statement, for presentation of financial statement. But if I talk about Indian accounting standard, in Indian accounting standard, if someone will tell you that please prepare the financial statement under Ind AS, in that case, not only Schedule 3, even Ind AS 1 is also the authority which guides you how to prepare and present financial statement. And that is why the title of Ind AS 1 is Presentation of Financial Statement. If I compare this with AS 1, the title was Disclosure of Accounting Policies. So no accounting standard was taking care of the financial statement. But here Ind AS 1 is taking care on the presentation part of the financial statement, right? So today in the first half till 8:30, we will be covering Division 2 to Schedule 3. I mean to say the format of the financial statement. Then I will start Ind AS 1 presentation of financial statement. Few things are interchangeable, few things are what I'll discuss here. It will equally applicable to Ind AS 1 as well, right? So let's start the agenda with Ind AS 1. Let's start the agenda with Ind AS 1. So let's start the agenda with Schedule 3, Division 2 to Schedule 3. Friends, as I told you that under Indian accounting standard, two things. One is Schedule 3 and second one is Ind AS 1. These are the two authorities, these are the two guidances which are available for preparation and presentation of financial statement, right? What is Schedule 3? Schedule 3 is a schedule. Schedule 3 is a schedule which is given under Companies Act 2013. This Schedule 3 is a schedule which is given under Companies Act 2013, and this schedule prescribe the format of the financial statement, right? So under the Companies Act, if you need to refer the guidance which is available for the format of the financial statement, then what is the right guidance? The guidance is available in Schedule 3, right? Is that clear? Like in Companies Act, there are so many sections, then there are so many schedules. So Schedule 3 is one of the schedule which takes care of the format of the financial statement. And let me tell you, we are only talking about the Companies Act. We are only talking about the companies, right? We are only talking about the companies. Yeah. Is that clear? We are not talking about non-corporate entities. Schedule 3 is only applicable to the presentation or preparation of the financial statement for corporate entities, for companies, right? Like Bharti Airtel, like Larsen and Toubro, Nestle, ITC, okay, Reliance Industries, Adani Group. So this Schedule 3 is applicable to companies, okay. And what the Schedule 3 prescribes? It prescribes the format of the financial statement, right? That what should be the structure of your financial statement, what should be your format of the financial statement. This is prescribed by Schedule 3. I hope the context is clear to everyone. Yeah. Okay, very good. I can see a lot of students are there on the query link. Yes. Good morning, Manikant. Good morning, Viraj. Let's move on. Friends, now the Schedule 3 has three parts, right? And when I'm talking about these three parts are divided into three things, which is Division 1, Division 2, Division 3, right? There are three divisions to Schedule 3. If you have to prepare your financial statement, under IGAP, under accounting standard, right? In that case, division 1 will be applicable. And this division 1 had been notified on 26 March 2014. You know when the Companies Act 2013 came? Are you aware? When Companies Act 2013 came, Companies Act 2013 was applicable from 1st April 2014. Companies Act 2013 was applicable from 1st April 2014, right? Was applicable from 1st April 2014. Okay. So in that Companies Act 2013, the schedule was notified on 26 March 2014, right? And that Schedule 3 was applicable on the companies which are preparing the financial statement under IGAP, right? Because at that point of time, Ind AS were not there. Is that clear? At that point of time, Ind AS was not clear. So friends, this division 1 of Schedule 3 is applicable to the entities, applicable to the companies which are preparing their financial statement under IGAP, which are preparing their financial statement under IGAP, right? Okay. Is that clear, friends? Is that clear? Now, friends, if someone will ask you that whether this division 1 is applicable in your CA final curriculum, answer is no. But since you are pursuing your articleship, right, you must have clients which are preparing their financial statement under IGAP. You are auditing those clients. So their division 1 will be applicable. Right? So you need to understand which division is applicable to which set of entities. Division 1 is applicable to the companies which are preparing their financial statement under IGAP. Division 1 to Schedule 3 was notified on 26 March 2014. Right? And this Schedule 3, this Division 1 got amended. This Division 1 got amended on when? On 11 October 2018. Friends, this Division 1 got amended on 11 October 2018 and this got further amended on 24th March 2021. Friends, this 24th March 21 amendment was a huge amendment in all the division of Schedule 3. It was a huge amendment, I would say, right? This has not only changed Schedule 3, I would say this has entirely replaced the old version of Schedule 3 with the new version of Schedule 3. I can say that, right? So I hope it is clear. Division 1 is applicable to the companies which are preparing their financial statement under IGAP, right? Friend, just give me a minute. Just give me a minute. Yeah, sorry, there was some technical glitch. Okay, and this Division 1 to Schedule 3 got amended on 11 October 2018 and on 24th March 2021. Now coming to the main Division 2 to Schedule 3, which is applicable in your CA final curriculum. Sir, what is Division 2 to Schedule 3? Friends, Ind AS were notified on 16 February 2015, right? And these Ind AS were applicable mandatorily from financial year 16-17, right? And these Ind AS are substantially different from accounting standard. When I'm saying substantially different from accounting standard, I'm talking more from the recognition perspective, presentation perspective, classification perspective, disclosure perspective. To take an example, preference share capital. It was disclosed or it was presented as a part of the share capital in your IGAP, in your accounting standard. But in Ind AS, it is not a share capital. You will be able to understand when you will have a session on financial instrument, you will be able to understand that this preference share capital, if it is redeemable, it is not your equity, it is your liability, right? Again, This requires a change in the presentation of balance sheet. Second example, if I can take, is minority interest. Friends, when you read consolidation related standard, you will be able to understand that in Ind AS, the concept of minority is not there. The concept of non-controlling interest is there. Again, this is a new nomenclature. Friends, as I told you, there are 39 Ind AS in comparison to 27 accounting standard. So accounting standard are only 27. Ind AS are 39, right? So we have 12 more standards. 12 more standards means 12 more guidances on different topics. Okay. For example, agriculture. Friends, the concept of biological asset, the concept of agriculture in terms of accounting standard was not there earlier. But now we have a separate standard on agriculture. So there is a line item called biological asset. There is a line item called bearer plants. You will be able to learn this concept when you will have a session on Ind AS 41, which relates to agriculture. Friends, for electricity companies, there is a line item called regulatory deferral balances, regulatory deferral accounts. Again, on this item, there was no accounting standard, but in Ind AS, in CA final, there is Ind AS 114, which talks about regulatory deferral accounts, regulatory deferral balances. Now, this line item comes under the balance sheet, and this is for the electricity companies, right? So, friends, again, if something which is new in Ind AS, it requires to be incorporated in the format of financial statement, right? So, when Ind AS came, friends, there was a need to introduce or to amend the schedule 3, right? But then MCA decided to make a separate schedule 3, make a separate format for Ind AS balance sheets, for Ind AS financial statement. And with this objective, on 6 April 2016, on 6 April 2016, with this objective on 6 April 2016, Ministry of Corporate Affairs comes with a division 2 to schedule 3. Division 2 to schedule 3. And this division 2 was applicable for the companies which are preparing their financial statement as per Indian accounting standard. And this division 2 to schedule 3 was applicable to non-NBFCs, means other than NBFC companies. For example, Reliance Industries Limited, Bharti Airtel Limited, Industars Limited, right? Air India Limited, okay, Nestle, ITC, Larsen and Toubro, Tata Motors, Tata Steel, okay, Ambuja Cements. So these are the non-NBFC, other than NBFC. Sir, what are the NBFC companies? HDFC Limited, not bank, HDFC Limited, Bajaj Finance Limited, Bajaj Finserv Limited, Muthoot Fincorp Limited, right? So these are the NBFC companies. So this division 2 was only applicable to non-NBFC companies which are preparing their financial statement as per Indian accounting standard, right? When this division 2 to schedule 3 was notified, this division 2 to schedule 3 was notified on 6 April 2016, right? Sir, is there any amendment after 2016 in division 2 to schedule 3? Yes, this division 2 to schedule 3 was amended on 11 October 2018. There was very small amendment. And as I told you, on 24th March 2021, the last amendment, it was a huge amendment in division 2 to schedule 3 as well. Few of you, if you are pursuing your articleship and you have a Ind AS clients, right? Probably you will be aware of that now there is a requirement of giving a aging of debtors, aging of creditors, aging of capital work in progress. So this requirement was not there prior to 24 March 2021, right? I'll talk more about that. From Ind AS perspective, from your CA final curriculum perspective, division 2 to schedule 3 is important. Division 2 to schedule 3 is important, right? You have to concentrate, you have to focus on division 2 to schedule 3 in your study material. Division 2 to schedule 3 was covered, right? Friends, now As I told you in the last class, on 16 February 2015, Ind AS were notified. And at that point of time, the roadmap for applicability of Ind AS was decided for companies other than NBFC companies. Now, what happened after 1 year, that is on 30th March 2016, the roadmap for applicability of Ind AS was decided for NBFC companies as well. And it was effective from financial year 18-19. It was effective from financial year 18-19. Okay. Friends, in that case, what happened? As the business of the NBFC is concerned, it's altogether a different kind of a business in comparison to non-NBFC companies, right? For example, when you look at the cash and cash equivalent of NBFC companies, it will be huge, right? But in non-NBFC company, it is like a very small or minuscule amount kind of thing, right? Because these company will not take more and more money in cash and cash equivalent. Rather, if they have surplus case, they will invest either into expansion of the business or either into some long-term asset which will give good returns. Okay. But as the nature of the business of NBFC is concerned, they have to carry a huge cash and cash equivalent, right? Non-NBFC could have a smaller loans and advances because that is not their cup of tea. But NBFC probably has a huge chunk of loans and advances. So friends, when Ind AS was made applicable to NBFC companies from financial year 18-19, again a need was felt to have a separate format of financial statement for NBFC companies, right? In that case, when MCA was in MCA, of course, in collaboration with ICAI, they have done a lot of deliberation and decided that let's introduce a new schedule 3. When I'm saying a new schedule 3 means a new division of the schedule 3. So friends, with that objective, division 3 was notified on 11 October 2018, right? And this division 3 was only applicable to NBFC companies which are preparing their financial statement under Ind AS. NBFC companies which are preparing their financial statement as per Ind AS, right? And this Division 3 to Schedule 3 was notified on 11 October 2018. And again, as I told you, it got amended on 24th March 2021, where there was a huge amendment in all the divisions of Schedule 3. Right? Now, just to summarize, friends, we have 3 divisions in our Schedule 3. Schedule 3 is a part of the Companies Act 2013. Schedule 3 prescribes the format of the financial statement. And this format of financial statement has only been prescribed for the companies. Why? Because we are talking about Companies Act. It is not applicable to non-corporate entities. Okay. Friends, the first division, Division 1 to Schedule 3, is applicable to the companies which are preparing their financial statement as per accounting standard, old accounting standard, right? And this Division 1 to Schedule 3 was notified first on 26 March 2014. And there were 2 amendments, 11 October amendments, 11 October 18 and 24th March 2021. Again, then when Ind AS were notified, Division 2 to Schedule 3 was notified on 6 April 2016. This Division 2 is applicable to the companies which are preparing the financial statement as per Ind AS. And this Division 2 is only applicable to non-NBFC companies, right? Okay. And this Division 2 got amended on 11 October 2018 and further amended on 24th March 2021. Then friends, there is a Division 3. Division 3 is applicable to NBFC companies like Bajaj Finance Limited, Muthoot Fincorp Limited, Sriram Finance and Transport Company Limited. So this Division 3 is applicable to NBFC companies. Which NBFC companies? Which are preparing the financial statement as per Indian Accounting Standard, Ind AS, okay? And this Division 3 was notified on 11 October 2018 and it was further amended on 24 March 2021. From CA final curriculum perspective, Division 2 is relevant, Division 2 is important. From your real life perspective, from the practical aspect, from being a chartered accountant, all the divisions are relevant, all the divisions are important, which gives you a lot of benefit in your practical life. I hope the context is clear to all of you, friends. Yeah. Good morning, Tanisha. I hope the context is clear. We have three divisions. Division 2 is important. Why? Because we are learning Ind AS and we are learning Ind AS. Okay. And that's why we have to learn the format of the financial statement for Ind AS companies. Okay. But we have been restricted to non-NBFC companies only. Is that clear? Shall I move forward? Very good. Yes. Friends, now let's discuss what are the element of financial statement. Friends, what are the element of financial statement? Can anyone tell me quickly what are the element of the financial statement? You are right, Rahul. So Shruti is asking, sir, from exam perspective, also division 2 is important. Yes, Shruti, division 2 is important, right? For example, if the question will be there on preparation of financial statement, or let's say balance sheet, in that case, you have to refer division 2 to schedule 3, right? Yes, what are the element of financial statement? Rightly mentioned by Rahul, there are equity, liability, and assets, or I would say asset, liability, and equity. There are three elements to the financial statement, and there are three elements to the balance sheet and two elements to the P&L, profit and loss, which is income and expenditure, right? So asset, liability, equity, income, and expenditure. There are five elements to the financial statement. Even globally, there are five elements to the financial statement. Ritik, it is not balance sheet, P&L, and cash flow. I am asking element of the financial statement. Whatever you are saying, that is your component of the financial statement. I am asking element of financial statement. So मैं पूछ रहा हूँ कितने तत्व हैं, पंच तत्व, right? What are the पंच तत्व? So there are five elements to the financial statement: asset, liability, equity, income, and expense. Whatever name you can take, it will be fitted into these five elements of the financial statement. For example, Tanisha will say that, sir, I have paid 5,000 salary to my driver, 5,000 cash to my driver. So what is cash? Cash is an asset. Paying a salary to the driver, what is that? That is an expense. Okay, that is an expense. Probably Deepak will say that, sir, I have deposited 5,000 rupees in my bank account, or in my, yes, in my saving bank account. So cash is your asset, bank is again your asset, right? So one asset is credited and another asset is debited, right? Vanshika will say that, sir, I have taken a loan, I have taken a home loan because I purchased a house, and that is why I've taken a home loan. What is house? House is an asset. It's a property, plant, and equipment. It's an asset. What is your loan? Loan is a liability, right? Loan is a liability. JSW Infra, they are just they came with the IPO. Okay, so JSW Infra will say that we have raised equity by way of IPO, initial public offer. So they will get the cash, they will get the bank, right? Cash, I mean to say, they will get the money into the bank. So what is that? That is an asset. But the equity share they're issuing to the public, what is that? That is equity. That is equity, equity share capital, right? So whatever name you will take, whatever nomenclature you will take, whatever transaction you will say, it's get fitted into these five elements of the financial statement. You all agree with me? Being a commerce student, being a CA aspirant, you all agree with me? Or do you have any disconnect? Sekhar, Tanisha, Pooja, Shruti, Vanshika, Deepak, Rahul, Viraj, Manikant, are you all agree with me? Okay, everyone is agreeing with me. Very good. Yeah, so friends, we understood there are five elements of the financial statement. And do you know how many components of financial statement are there? And let me tell you, Ind AS 1. Ind AS 1 has defined the component of the financial statement as well. Ind AS 1, right? Ind AS 1, which is the agenda of the day also, Ind AS 1 talks about presentation of financial statement. The title is presentation of financial statement, which we are going to start in the second half of the session. Okay. Now coming to the component of the financial statement. So friends, as discussed, this element of financial statement we have understood. Don't get confused between the element and component. Generally, whenever even I'll ask this question to the chartered accountant, not only students, even they will give me the answer that element of financial statement is balance sheet, P&L, cash flow. These are not element, these are component. This is defined under Ind AS 1, right? Schedule 3 has not defined the component of the financial statement. Who has defined? Always remember, Ind AS 1, right? If someone will ask you that you are a chartered accountant, please tell me, since you are preparing my balance sheet, you are preparing my financial statement, why you are giving cash flow? Why you are giving P&L? Why you are giving notes to accounts? Then you should tell them, right? Okay, friends, this component of financial statement is defined under Indian Accounting Standard 1, right? And we have to adhere all the requirement of Ind AS 1. Is that clear? All the requirement of Ind AS 1. Now let's talk about like 5 element are there, 5 component is also there, right? Friends, the first component is, of course, you understand balance sheet. And what is balance sheet? Balance sheet shows the statement of financial position. It shows your financial position. What is your financial position on the particular day, right? Like 31st March. That's why you must have seen that balance sheet में कैसे लिखा होता है? Balance sheet में लिखा होता है balance sheet asset. Have you ever seen the balance sheet for the year ending? Have you ever seen the balance sheet for the year ending? Have you seen that? Never, right? Balance sheet is always asset, net worth. If I'll ask you, let's say, Deepak, what is your net worth? Will you say that, sir, my net worth for the year ending is this? You will say, my net worth as on today is this, right? When you see the list of billionaire, so the list of billionaire as on this date, right? Because it shows your financial position. So position always needs to be checked as on date. Okay, as it. Very good. Very good. Okay. So friends, balance sheet. Number 1 is balance sheet. Okay. So where the format of the balance sheet is given, the format of the balance sheet is given under Schedule 3. So let's say Viraj went to the audit of the financial statement of a large listed company. Now, when Viraj is auditing the financial statement, first component, you got the balance sheet. When he is looking at the balance sheet, what guidance he need to refer? Had it been accounting standard, had it been the old ICAI, he should have referred only Schedule 3. Which division of Schedule 3? Division 1 to Schedule 3. But now, since it is a listed company and Ind AS is applicable, so Viraj, will you refer only Schedule 3 or will you refer something else also for balance sheet? Friends, if I talk about balance sheet, the format is given in Schedule 3, right? But the guidances is also available in Ind AS 1. फॉर्मेट तो शेड्यूल 3 में दिया हुआ है, बट उससे रिलेटेड गाइडेंस, मतलब बैलेंस शीट से रिलेटेड कुछ गाइडेंस कहां दिए हैं? इंड एस 1 में भी दिया है, ठीक है? सो इंड एस 1 इज आल्सो एन अथॉरिटी which gives some guidance relating to the balance sheet. Which guidance? Of course, I'll cover when I'll come to Ind AS 1. But the point is, for balance sheet, you need to refer two things. One is Division 2 to Schedule 3 and Ind AS 1. Ind AS 1 prescribes some guidance and Schedule 3 prescribes the format of the balance sheet, right? Is that clear? And just to give you a flavor, in Ind AS, in Division 2 to Schedule 3, the balance sheet starts with asset, then equity, then liability, right? So the presentation of balance sheet is just reverse in comparison to accounting standard balance sheet, right? In Ind AS, it starts with asset, then equity, then liability, right? So asset comes first. Sir, why we have done like this? Why we have started with asset, then equity, then liability? Why not we have followed the same format which we were following for ICAP? Because friends, this is a global format. Since our Ind AS are also the global standard. When I say global means it's a converged version of IFRS applicable to India. And that is why we have also made our format similar with the global format. So globally, they present asset first, then equity, then liability, right? So we have aligned with the global format of the financial statement. Is that clear? Is that clear, friends? Okay. So for balance sheet, the guidance is given in Ind AS 1 as well, and the format and guidance is given in Schedule 3. So you need to refer both. Statement of profit and loss. Friends, is it a profit and loss account or is it a statement of profit and loss? What is that? I have seen so many balance sheet, and when I'm saying balance sheet, I mean to say financial statement, where on the header of the P&L, the caption is statement of profit and loss. But in the notes to accounts, at so many places, the people are writing profit and loss account. In the accounting policy, they're writing profit and loss account. First of all, you should be very much clear that there is nothing called as profit and loss account, right? In your Schedule 3, the caption is statement of profit and loss, right? In your Ind AS 1, the caption is statement of profit and loss. So there is no profit and loss account. It is statement of profit and loss. Is it a statement of profit and loss or a statement of profit or loss? Is it and or? What is that? Whether it is statement of profit and loss or it is statement of profit or loss. Guys, is it profit or loss or is it profit and loss? Yeah, you are right. It is statement of profit and loss. And is there, not or is there. And very good. Okay, friends, the format of the statement of profit and loss is given under Schedule 3 and the guidance is also given in Ind AS 1. So you need to refer Ind AS 1 as well as Schedule 3 for the statement of profit and loss. Either you are acting as a management for preparation of P&L or you are acting as an auditor for auditing the P&L. You need to refer the guidance from Ind AS 1 as well as you need to refer the Schedule 3. You need to refer the Schedule 3 for the format of profit and loss. Friends, even when you read Schedule 3, it says that my requirement is the minimum requirement. And in addition to my requirement, whatever requirement is there in Indian accounting standard, in Ind AS, you have to refer all those guidances. You have to refer all those guidances, right? Just to give you a flavor, the statement of profit and loss is comparatively expanded. It is comparatively larger in comparison to accounting standard P&L, right? So your Ind AS statement of profit and loss is bigger than your accounting standard statement of profit and loss. Why, sir? Because there is a new section which is known as other comprehensive income. In your statement of profit and loss, there is a new section which is known as other comprehensive income. Friends, I'll discuss this part in Ind AS 1, right? Other comprehensive income. Okay. So statement of profit and loss will never be as it is always for the year ended, for the period ended. So this shows the performance. This is not a position. This is performance. So performance has to be evaluated always for the period, right? Is that clear? Is that clear? For example, if someone will ask you when you become CA, you will say that I become CA in May 2024, for example, right? But if someone will ask you how much time it took to become a CA, then you will say that 3 years. Okay. So friends, how much time means it shows the performance. And when you become CA, it shows the position, right? You understand this part? Okay, very good. Now the third component is statement of changes in equity. And what is meant by statement of changes in equity? Friends, although this kind of statement was never there in our old accounting standard financial statement, right? Right. So friends, if I talk about statement of changes in equity, first of all, what is that? A statement of changes in equity, statement of changes in equity is your movement in equity share capital and reserves and surplus, right? Equity share capital and reserves and surplus. Friends, this statement, or I would say this movement we were showing in notes to accounts in our old version of accounting standard financial statement. But in Ind AS financial statement, this is altogether a separate component where you need to show the shareholder performance, right? This statement of changes in equity is again for the year ended or for the period ended. This is not as it, this is for the period ended. That is number one. Number two, friends, if I talk about this thing, why, sir, why we are calling it as a separate component? We were giving it this entire movement in share capital, movement in reserves and surplus. When I'm saying movement in share capital means, what was your opening share capital? What was your addition? Means if you, let's say the company has come up with a right issue, so there is an increase in the number of shares. When the company has buyback, then there is a reduction in the number of shares. Then there is a closing balance. So this is a movement in equity share capital. What is meant by movement in reserves and surplus? For example, there is an opening retained earning, right? Then the company has made a profit during the year. So it has to be added to the retained earning. Less the company has paid the dividend. So of course your retained earning will be reduced and then your closing retained earning will be there. So friends, this is a movement of share capital and movement of reserves and surplus. This is not a statement of changes in equity. Sir, what do you mean by a separate statement? Why we are calling it as a component? Why? Because like the auditor and management is signing the balance sheet. The auditor and management is signing the profit and loss. Auditor and management is signing the cash flow. Likewise, this statement also needs to be signed by the auditor and the management, right? As a separate component. Is that clear, friends? It also shows the shareholder performance. Okay. Is that clear? Is that clear, friends? Deepak is asking, sir, in our profit and loss account, either we have profit or we have loss. So why we don't call the profit and loss account? First of all, Deepak, will not call account. It's a statement of profit and loss, right? But to answer your question, why we cannot call it as profit or loss? Why we are calling it as profit and loss? So Deepak, whenever you are presenting your statement of profit and loss, this statement is for 2 years, right? This statement is for 2 years. Am I right? Current year and comparative year. Current year as well as comparative year. In the current year, for example, you have profit. In the last year, you have losses. It is the same statement of profit and loss, right? In the same statement, there is a profit, there is a loss. So according to you, what we should call it? We should call it as a profit and loss, or we should call it as a profit or loss. Because comparative is a mandatory requirement as per Schedule 3 and as per Ind AS. So Deepak, that is why we are calling it as a statement of profit and loss, right? Right, Deepak? Okay. So friends, again, the format of statement of changes in equity is given in Schedule 3 and the guidance is given in Ind AS 1, right? This is a new statement. This is a new component which was not there in earlier accounting standard days, right? Then friends, there is a statement of cash flows. Statement of cash flows. And this statement of cash flows, you all are aware about operating activity, investing activity, financing activity, right? This statement of cash flow, whether the format of statement of cash flow is given in Schedule 3. I'm asking you, forget about Division 2. I'm sure in your article shape you must have seen the Division 1. I mean to say your Schedule 3 for ICAI companies. You must have seen that. Tell me whether format of financial statement and whether the format of cash flow statement is given in Schedule 3. Yeah, you're right, Radhika. It is not given. In your Schedule 3, neither in Division 1 nor in Division 2 and Division 3. Nowhere format of cash flow is not given. So the only guidance for format of Schedule 3 is your Indian Accounting Standard 7, which we are going to cover on Saturday, right? Indian Accounting Standard 7. This Ind AS 7 talks about statement of cash flows, right? So friends, if you are an auditor or you are working in a company, right, after being a chartered accountant, after becoming a chartered accountant, and someone will give you a job for preparation of cash flow, in that case you have to refer the guidance given under Ind AS 7 for preparation of cash flow statement. Friends, is it a cash flow account or is it a cash flow statement? Yes, it is a cash flow statement. Again, friends, is it a cash flow statement or is it a statement of cash flows? Is it a cash flow statement or is it a statement of cash flows? You're right. This is a statement of cash. Even the title of Ind AS 7 is statement of cash flows. Friends, whether this statement of cash flow is as it or for the period ended, whether this statement of cash flow is as it or for the period ended, it is for the period ended. Very good. It does not shows the cash position. It shows the cash performance, liquidity performance, cash performance, right? So it is always for the period ended, for the year ended, not as on date. Balance sheet will be as on date. Profit and loss, statement of changes in equity, and cash flow statement. It is, or I mean to say, statement of cash flows. It is for the period ended, for the year ended, right? What about notes to accounts? Now let's come to the fifth component, which is notes to accounts. What about notes to accounts? Friends, first of all, what is notes to accounts? So notes to accounts is nothing. It's a elaboration or expansion of the item in balance sheet, profit and loss, and at the different places, right? For example, if you will look at Reliance Industries balance sheet, you will find a property, plant and equipment. And the size and value of the property, plant and equipment is what? Let's say 10 lakh crore. So they have the property, plant and equipment of 10 lakh crore. Now, friends, this 10 lakh crore is a single line item, right, in the balance sheet. Do you think that this one line item called as 10 lakh crore is sufficient enough to the reader of the financial statement to understand the PP position of the company? Answer is no. Being a reader of the financial statement, being a user of the financial statement, let's say Viraj is an analyst, right? Or let's say Vanshika is also an analyst. They want to invest 50 lakh rupees in a company. So what they need to look at in property, plant and equipment, they want to understand, oh, what is the gross block, right? And even in the gross block, what is the opening? What is addition? What is deletion or disposal? What is closing balance, right? So they want to understand the gross block. They want to understand the accumulated depreciation. They want to understand the net block, right? in your P&L in your balance sheet, face of the balance sheet, only one line item as known as PP net block is given. So first the breakup needs to be given. Number two, this 10 lakh crore consists of what? This 10 lakh crore consists of what? I'll take one example and you will give me the answer, right? You have 10 crore rupees of PPE, of fixed asset, of property, plant and equipment, right? You have the car, you have the building. You have the car, you have the building. What is the nature of both these items? Both are fixed asset, both are PPE, both are property, plant and equipment. Now, Vanshika has 10 crore rupees in the buildings or land. Tanisha has 10 crore rupees Tanisha has invested 10 crore rupees in the cars, right? Vanshika invested in land and building. Tanisha invested in cars, in vehicles. On the face of the balance sheet, in the Tanisha's balance sheet and in the Vanshika's balance sheet, it is just a single line item PPE, property, plant and equipment, 10 crore. I am a reader of the financial statement. I'm the user of the financial statement. I'm indifferent whether I should invest in Vanshika's company or whether I should invest in Tanisha's company. But when I enter into the notes to accounts in the PP schedule, I was able to understand that Vanshika has invested in a non-depreciable kind of asset and appreciable kind of asset, which is land and building. Means the value of these assets will grow in future. But Tanisha has invested in the depreciable asset. The value of the car will go down. It will not appreciate. The life will go down, right? So after entering into the notes to accounts, I was able to take a view. I was able to conclude, or I was able to take a decision that I should go with the Vanshika's company, right? I should invest there. I should not invest in Tanisha's balance sheet. Why? Because she has a depreciable asset. Vanshika has a appreciable asset, right? That is number one. But looking on the face of the balance sheet, both were same. They were using the nomenclature property, plant and equipment, 10 crore, right? But after entering into the notes to accounts, I was able to understand that this is the land, this is a land asset, this is the building asset, this is the vehicle asset, right? So class of asset, like when you look at Reliance Industries, they have around 8 to 9 class of asset. They have invested in land, they have invested in building, they have invested in plant and machinery, they have invested in aircraft, they have yachts, right? They have furniture and fixture, they have office equipment. So they have multiple class of assets. So how do you aware about these class of assets? Only by looking at notes to accounts. Is that clear, friends? Is that clear? So friends, first of all, in notes to accounts, it will give you the quantitative information as well as it will give you the qualitative information. Okay. So friends, in notes to accounts, it will give you the breakup of balance sheet items, breakup of P&L item and detailing of these items. That is number one. So schedule 3 provides some breakup, some notes to accounts for the financial statement. But it is not only schedule 3. It is Ind AS as well. Whether only Ind AS 1? Answer is no, all Ind AS. For example, sir, first of all, schedule 3 says that whatever I am telling you, this is the minimum requirement, right? This is not the maximum requirement. If other Ind AS talks about something different, you have to refer that also. For example, related party disclosure. Do you think that the related party disclosure is given in schedule 3? Do you think that the related party disclosure is given in schedule 3? Yeah. Answer is no. Schedule 3 only says that in addition to my requirement, you have to follow, you have to comply with the requirement of all Indian accounting standard. That's all. So friends, there is no related party disclosure format given in schedule 3. But do we need to provide this related party disclosure in our financial statement? Of course, answer is yes. Answer is yes. So you need to refer Ind AS 24 for the related party disclosures. Second example, in the profit and loss account, in the P&L, not profit and loss account. Now again, I'm using the word account. It is not account. In the statement of profit and loss, there is a line item called employee benefit expenses. Have you seen that line item, employee benefit expenses? Yeah. Have you seen that line item, employee benefit expenses? Yes. Friends, this line item called as employee benefit expenses. This is a line item on the P&L. When you look at Schedule 3 in the P&L format, this line item is there. And in the breakup, in the notes to accounts, Schedule 3 says that you have to provide the breakup of the single line item employee benefit expense into three parts. Number one, salary and wages. Number two, contribution to provident fund and other statutory funds. Number three, staff welfare expenses. Right? So you have to provide the breakup of this this employee benefit expenses into three parts. In your notes to accounts, you have to provide the breakup of this employee benefit expenses into your salary and wages, right? Your contribution to provident and other funds, and your staff welfare expenses, right? Friends, but there are, if I talk about employee benefit expenses, retirement benefits like gratuity, leave encashment, and company is getting the actuarial valuation done for these kind of liabilities. Have you heard about actuarial valuation? You must have been heard about actuarial valuation because you also have, covered accounting standard 15 in your CA Inter. So friends, this actuarial disclosure, which is part of your notes to accounts, it is not given in your Schedule 3 form. It is not given in your Schedule 3. It is given in Ind AS 19. It is given in Ind AS 19, which is your employee benefits. Third example, operating segment reporting. Whether segment reporting is required in your financial statement? Of course, yes. Of course, yes. Whether segment reporting disclosure, whether segment reporting format is given in your Schedule 3? Whether segment reporting format is given in your Schedule 3? Answer is no. Where it has been given, you have to refer Ind AS 108 for segment reporting in your financial statement. Right? So have you understood, for notes to accounts, not only Schedule 3, of course, you need to refer Schedule 3, but you need to refer all Ind AS, all Indian accounting standard for the disclosure requirements for the notes to accounts, right? Is that clear? So friends, in the component of financial statement, now you have understood there are 5 component: balance sheet, statement of profit and loss, statement of changes in equity, statement of cash flow, and notes to accounts. You need to refer Schedule 3, I mean to say Division 2 to Schedule 3 for preparation and presentation of your financial statement. In addition to Schedule 3, you need to refer Ind AS 1, and for cash flow statement, you need to refer Ind AS 7, and for all the notes to accounts, all the disclosure related requirement, you need to refer all Ind AS, all applicable Ind AS in addition to Schedule 3, right? This is how this entire thing has been structured. I believe you guys are able to understand this component of financial statement and how things have been given in Schedule 3 Ind AS, right? I believe you are well aware about, well understood this concept. You are right, Tanisha. AS 17 was there in accounting standard. In Ind AS, it is Ind AS 108. Okay, friends. Now let me show you one of the financial statement. Please let me know if the financial statement annual report of one of the companies is visible. So I'm showing you the annual report of a large listed company, which is Hindustan Aeronautic Limited. Please let me know if this annual report is visible, guys. Is it visible, annual report? Whether annual report of Hindustan Aeronautic Limited is visible? Let me take you on the component of the financial statement first. Friends, you can see that there is a standalone balance sheet. This balance sheet started with the non-current assets, right? Is this balance sheet started with the assets, right? In IGAP, it starts with equity. Friends, although this company has given the breakup on the face, but breakup on the face is not required. Ideally, if you will see the annual report, this line item is only property, plant and equipment with the net block. The entire breakup is given in the notes to accounts. This breakup on the face is not required. No one is giving that, this company has given, right? So you can see that this balance sheet started with assets, right? This balance sheet started with assets. And then there is a current asset, then there is a total assets, and then there is a equity. Then there is a equity. You can see that there is a equity and liability. So first they have given equity, then they have given liability. Instead of reserves and surplus, they have used the word other equity. So this word is there in Ind AS. Okay. Then there is a non-current liability, then there is a current liability. So this is the balance sheet. And they have referred the Schedule 3 format for balance sheet. You can see that. So auditor have signed this balance sheet, and the board of directors have signed this balance sheet, right? Then there is a standalone statement of profit and loss for the year ended, right? Then they have given the profit and loss. And I'll show you what I've told. I'll show you then. They also have given a separate section, which is other comprehensive income. This is a new section in Indian accounting standard. This section was not there in ICAI, right? So you can see that there is a other comprehensive income, okay, which is given in this. And again, this statement of profit and loss is signed by the auditor and the board of directors. Then friends, there is a statement of changes in equity. As I told you, there is a statement of change in equity. You can see that in statement of changes in equity, it is again for the year ended. There is a opening balance, there is a changes, right? Then there is a, since there is no change, that is why there is no addition and deletion, right? Then other equity, there are a lot of, there are a lot of reserves and surplus, okay? And the movement of reserves and surplus is given here. You can see that this statement of changes in equity is also signed by the auditor and the board of directors, okay? Now there is a statement of cash flow. And you can see that this statement of cash flow is also for the year ended. Current year, comparative year is always there. So this is your cash flow from operating activity, cash flow from investing activity, and cash flow from financing activity, right? Then there is the entire changes of operating, investing, and financing is clubbed into your net cash movement. When you add that net cash movement in your opening cash and cash equivalent, it will give you closing cash and cash equivalent. Then there is a accounting policy, means notes to accounts, okay? Then there is a notes to accounts as well. So in notes to account, there is accounting policy and breakup of balance sheet, breakup of P&L, other notes like contingent liability, actuarial disclosure, related party disclosure, segment reporting. So these all are there. So you can see that after the accounting policy, they have given the breakup of the balance sheet items and the P&L items and the other disclosure requirement, right? So I want to just give you the flavor that how this is there. I'm sure that you guys have seen the balance sheet, the financial statement in your life so far. Okay, is that clear? Any doubt, any problem, any question so far? Any question so far? Okay, friends, now let me discuss you some questions, right? And I'll discuss the schedule 3 with some questions. Okay, so this schedule 3 is not very much relevant, or I would say the direct question will not be there from schedule 3 in your examination. So normally the requirement of schedule 3 will come like when the in the question, when a balance sheet, a preparation of balance sheet has to be given to you, or let's say a section of P&L, profit and loss will be given to you, then you have to keep in mind the consideration of schedule 3. For example, while preparing the balance sheet, so you should not start your balance sheet with equity. You should start your balance sheet with assets, because in your schedule 3 or Ind AS presentation, asset comes first, then equity, then liability, right? So you have to keep this in your mind. Okay. Probably when you prepare your statement of profit and loss, there are some line item which is related to other comprehensive income, so you have to show it as a separate section. I'll discuss this in detail in Ind AS 1, right? Okay, so let's move on, guys. I hope my word file is visible to all of you. Is that visible? Understanding the universe of division 2 to schedule 3. Is my word file visible to everyone? These questions on schedule 3. Yeah, is that visible? The word file? Okay, let me share it again. I hope it is visible now. Yes. Friends, so I'll discuss important questions on schedule 3 so that you will have a complete understanding and complete revision of schedule 3, right? Okay. So the format, you are not required to learn the format. Okay. You are required to learn the basic, not the format. You can refer the format from your study material, but you need to learn the fundamental or basic of this schedule 3. So I'll start with some rapid fire kind of questions, and of course I'll give the answers as well. I'll share this word file as well with ICAI. Schedule 3 is applicable to companies only, or it is applicable to non-corporate as well? What is your question? What is your answer? Tell me the quick answer to it. Whether schedule 3 is applicable to companies only, or it is applicable to non-corporate, I mean to say partnership, proprietorship, trust, Hindu undivided family, body of individuals, cooperative society, whether the schedule 3 is applicable to these entities also. Very good, you're right. This is not applicable to non-corporate. This is only applicable to companies, right? Only, answer is only applicable to companies, right? Companies incorporated in Companies Act, right? This is your answer. Okay. How many divisions to schedule 3 is there, and what is the applicability? Tell me how many divisions to schedule 3 is there. Tell me quickly. Three divisions. There are three divisions to schedule 3. Three divisions to schedule 3. Right? Division 1 is applicable to Division 1 is applicable to what? Applicable to companies following AS. AS means IGAP, Indian GAAP. Then your Division 2. Division 2 is applicable to which company? Division 2 is applicable to companies following Ind AS. When instead of companies, write non-NBFC company. Non-NBFC's company following Ind AS, right? And what about Division 3? What about Division 3? Division 3 is applicable to NBFC companies. NBFC companies following Ind AS, right? Is that clear? Is that clear, friends? Very good. When did Division 2 to Schedule 3 was notified? Tell me, when did Division 2 to Schedule 3 was notified. And who has notified? MCA notified on which date? 6 April 2016. 6 April 2016. Whether Schedule 3 got amended post originally notified. Whether Schedule 3 got amended post originally notified. If yes, when and when was the major amendment happened? If yes, when and when was the major amendment happened? First of all, whether Schedule 3 got amended post originally notified? Yes. Yes. So let me talk about only Division 2 here. Okay. Yes. And when? So Division 2, I'm talking about Division 2 only. Division 2 was amended on 11 October 2018 and 24 March 2021. Major amendment in all the divisions. Major amendment in Schedule 3 was on 24 March 2021. Is that clear? Is that clear, friends? This is what we have discussed. Is that clear, friends? Sir, do we need to remember all the dates? Not required. Not required, right? But it's always better if you understood these dates, if you remember these dates, it's always better to refer it quickly. Whether Schedule 3 is applicable to standalone financial or it is also applicable to consolidated financials. Friends, when you read Schedule 3, it says that the requirement of Schedule 3 is applicable to consolidated financial statement mutatis mutandis. What is meant by mutatis mutandis? Mutatis mutandis means same thing in the same sense. It says that whatever requirement of Schedule 3 to standalone financials is there, it is equally applicable to the consolidated financial as well, right? So yes, Schedule 3 is applicable to consolidated financial also. So applicable to consolidated financials also, right? Whether requirement of Schedule 3 need to be strictly followed or if there is any requirement of Ind AS and Companies Act, can the Schedule 3 requirement needs to be modified? Guys, let's say if there is a requirement of Schedule 3, whether this requirement has to be strictly followed or if there is any requirement of Ind AS and Companies Act, can the Schedule 3 requirement need to be modified? If Schedule 3 is saying X, whereas Ind AS and Companies Act is saying Y, so whether this X can be modified to Y, whether this X can be modified to Y, or let me ask the seventh question first. If there is a conflict between Schedule 3 and Ind AS, which will prevail? Who will prevail? If there is a conflict between Ind AS and Schedule 3, who will prevail? Tell me the answer of question number 7. Although Tanisha has given the right answer of question number 6 as well. In case of a conflict between Schedule 3 and Ind AS will prevail. Ind AS will prevail, right? Whether requirement of Schedule 3 needs to be strictly followed or if there is any requirement of Ind AS and Companies Act, can the Schedule 3 requirement need to be modified? Answer is yes. Ind AS, answer is yes. It has to be modified in compliance with Ind AS and other regulatory requirement. Let me give you the example here. Schedule 3 says that if the company has opted for a revaluation model of fixed assets, and due to the revaluation, if the change due to the revaluation, if the change in the fixed assets from opening to closing is more than 10%, in that case you need to give the disclosure, right? This is requirement of schedule 3. But when you read Ind AS, when you read Ind AS 16, standard on property, plant and equipment, it says that even though it says that it does not talks about the 10% or more, it says that if whenever the company has opted for the revaluation model and the company has recorded the revaluation, the company has to give certain disclosure, right? That's all. But schedule 3 says that the company has to give this certain disclosures only when the change is more than 10%. For example, the opening balance of fixed asset or PPE was 1 crore rupees. After revaluation, it is 1 crore 5 lakh rupees. Means there is a change of 5% only, which is less than 10%, right? Which is less than 10%. So friends, it says that schedule 3 says that since it is less than 10%, no disclosure is required. But Ind AS does not talks about percentage. It says if you have opted for revaluation model, you have to give certain disclosure. What is your revaluation change, right? So what is the impact of depreciation, revaluation, etc., etc. So in this case, if a company which has done the revaluation and even the change is less than 10%, still disclosure is mandatory. So the requirement of schedule 3 has been modified to cater the compliance of Ind AS, right? Is that clear? Question number 8. Whether any act or regulation requires a specific disclosure to be made in the financial statement of the company, whether it is required to be made in addition to those required under Ind AS schedule 3. For example, for listed companies, there is one more regulator. And when I'm saying about one more regulator, so for the listed companies, apart from MCA, apart from Companies Act, SEBI is also the regulator. Securities and Exchange Board of India is also the regulator, right? So if there is any requirement from the SEBI side, or for example, there is a bank. So on bank, apart from accounting standard, apart from Companies Act, RBI is the regulator. So for insurance company, apart from Companies Act, IRDA is also the regulator. So in addition to the requirement of the schedule 3, right, if there is a requirement of other regulator to provide some disclosure, right? So can those disclosure be provided in addition to schedule 3? Of course, answer is yes. You have to apply a rule of harmonious construction. You have to apply the rule of harmonious construction. Okay. What does it mean? It means in addition to schedule 3, if there is any requirement of Ind AS, if there is any requirement of the respective regulator, of course, all these requirements needs to be followed while preparing and presenting the financial statement, right? Is that clear, friends? So why these questions are there? Generally, generally students feel that, sir, we are, since schedule 3 is the authority, so we are only required to follow schedule 3. We are not required to follow anything else other than schedule 3. Answer is no. This is not the right answer. Okay. You are required to follow the other regulatory requirement as well. Okay. Which component of financial statements format is prescribed by schedule 3? Which component of financial statements format is prescribed by schedule 3? Balance sheet, P&L, statement of changes in equity, cash flow statement, notes to accounts. Tell me whether schedule 3 provides, whether schedule 3 provides the format. Yes, schedule 3 provides the format for P&L. Whether schedule 3 provides the format for P&L. Yeah. Yes. For statement of changes in equity, whether schedule 3 provides a format. Yes. For cash flow statement, whether schedule 3 provides a format. No. No. For notes to accounts, whether schedule 3 provides a format for notes to accounts. Yes. For some, for balance sheet, P&L, and some other notes, right? Like aging, etc. Other notes like aging, etc. Is that clear? Is that clear? Yeah. Tanisha is saying suddenly jumped from Ind AS to interpretation of statutes. I didn't understood you, Tanisha. I didn't understand you. Yeah. Yes. Next question. Whether the item in the balance sheet needs to be bifurcated into current and non-current. Is there any guidance given in Schedule 3 regarding that? Yeah. Whether in your balance sheet item needs to be bifurcated into current and non-current. Whether this item can come into current and non-current, item can be classified. You have seen your balance sheet, na? Yes. Your balance sheet item needs to be classified into current and non-current. Yes. Yes. It has to be classified. Even in your format, it is given into current and non-current, right? Whether any guidance is given in Schedule 3. Yes. Guidance is given in Schedule 3 as well as Ind AS 1. It also gives you the guidance of what is current, what is non-current. What is the balance sheet, P&L and SOCI format in Schedule 3? Tell me what is the balance sheet, what is your P&L, and what is statement of changes in equity format in your Schedule 3? Guys, tell me what is the format? So of course it's not a horizontal format, it's a vertical format. Your balance sheet starts with non-current asset, then current asset, then equity, then liability, right? This is how your balance sheet starts with. Okay. This is the format which is given in Schedule 3. Am I right? This is what it is given in the Schedule 3. So let me show you the format as well. Let me show you the actual Schedule 3. Just give me a minute. Let me show you the Schedule 3. Uh, yes. Let me show you the notification of Schedule 3. I hope this Schedule 3 format is visible. It is there in your study material also. Just a minute. This is this is not there. Just give me a minute. I'm just opening that. Yes. Let me know if it is visible now. Is it visible? Yes. This is your division 2 to schedule 3. Is it visible, friends? I hope it is visible. Yes. So let me take you to the balance sheet format, P&L format, and SOC format, right? This is the balance sheet format. You can see the balance sheet format. Current year, previous year, it starts with your, you can see that this start with your assets, right? And there is a non-current asset. In the asset, then there is a non-current asset. You can see that property, plant and equipment, save investment property, goodwill, other intangible assets. A lot of line items are there. You're not required to learn this line item. Then there is a current assets, right? Then there is your equity and liabilities. So first equity is there, then liabilities are there, non-current liability, current liability. Okay. So same. So this non-current current bifurcation is same bifurcation which we have already done in our accounting standard balance sheet, in our old balance sheet, right? Then there is a statement of changes in equity. You can see that in statement of changes in equity. So there is a opening balance. Then if there is some error in your equity share capital schedule, so that error needs to be corrected. It has to be shown separately. Then the corrected opening balance, then your movement in share capital during the year, then your closing share capital, right? So you can see that. Then there is your movement in your reserves and surplus and other reserves as well. Okay. So now coming to your profit and loss. So then there is a P&L format as well. So let me go there. This is your P&L format. This is your P&L format. You can see that current year number and comparative year number both needs to be given. This is your revenue from operations, other income, total income, then expenses are there, then exceptional item is there, right? You can see this. Then your PBT, tax expense, profit or loss from discontinued operations, continuing operations, right? Then tax expense, then profit or loss from discontinued operations. Okay. Then there is a section of other comprehensive income. Then there is a section of other comprehensive income, right? Then the profit for the period means profit after tax plus other comprehensive income known as total comprehensive income. This total is there. Then your earnings per share. Earnings per share for basic earning per share, diluted earning per share for discontinued operation for all operations, right? Then there is a breakup of this P&L also. So I've shown you the format of balance sheet, P&L and statement of changes in equity, which is given. And some other, some other disclosure requirement is also there in this schedule 3 format, right? You just need to refer that. So from the examination perspective, the direct question will not be asked from schedule 3, but indirect question may be there, right? As I told you, to prepare balance sheet, to prepare P&L. Okay, in that case, you should be aware about the format, right? Is that clear? Is that clear, friends? So this part we have covered. Yes, shown. This part I have already shown you. Whether any rounding of guidance is given in schedule 3. If yes, what is the provision? Friends, is there any rounding of guidance given in schedule 3? Tell me. If there is any rounding of guidance given in schedule 3. Is it given or not given? Friends, this is the guidance, which is what is meant by rounding off. You must have seen the balance sheets of so many companies, right? If I talk about Reliance, let's say, Reliance has a turnover of, for example, let's say 15 lakh crore. 15 lakh crore. Do you know how many zero are there in crores? 70. How many zero are there in lakhs? 50. Then there is a 15. So there is a digit. There is a digit in the numbers of 13, 14 digit numbers, right? 13, 14 digits number. Let's say if Reliance has to present its sales or revenue numbers, probably this number will run into, let's say, this will be the final number of Reliance for 1 year. Let's say this will be the number. If they have to present this into the absolute number, and this is for 1 year, and the same is for the comparative year also. So the P&L will look like this P&L, right? Even you will not be able to understand what is the turnover of Reliance, right? You will confuse. But if rounding off is there, and Reliance will simple say that my all the money is in crores, rupees in crores, right? And it will write 15 lakh. It will write 15 lakh in the number. So it will write 15 lakh 26,206. You will be easily able to read that, and you will understand, oh, Reliance turnover is 15 lakh crore. So they have given the crore as a unit. Their net profit is, let's say, 35,000 crore. So they have given this crore as a unit, and one can easily relate, oh, the net profit is 35,000. So friends, to make the financial statement more readable and more understandable, Ministry of Corporate Affairs has made this rounding of requirement mandatory, right? Now, what is the guidance? The guidance is, if the total income of any company is less than 100 crore rupees, total income, in that case, you can do the rounding off in the nearest 100, 1000, lakhs, or millions, or decimal thereof. For example, the total income is less than 100 crore rupees, and the revenue is, for example, 256 crores, 256 crores, or let's say 256 crore and 25 lakhs. And now this company has to, here the total income is less than 100 crore. Okay. So for example, the revenue of the company is 95 crore, 95 lakh. 95 crore, 95 lakh. So this company has to present the number in lakhs or millions. Okay. So how the company will write this 95 crore, 95 lakh? So this company will divide by 1 million, means divide by 1 after 60, right? And this company will write 950.95 million. 950.95 million, right? So you can see that this 95 crore, 95 lakh, probably it consists of 10 digits. It comes into just 5 digits, 950.95 million, right? 950.95. This is how this rounding off is happening. For example, if the company has 100 crore, the total income is 100 crore or more. In that case, one more unit is allowed, which is crores. If it is less than 100 crore, then either 100,000, lakhs, or millions, or decimal thereof. But if it is more than 100 crore, in that case, the 100 is not there, the 1,000 is not there. Either you can round off in lakhs or millions or crores. For example, the company has a turnover of 256 crore. So they can just write 256. Or for example, if the turnover is 256 crore and 25 lakhs, so they can simple write 256.25. Right? So this is the guidance which is given for the rounding off on the basis of total income. You need to check whether the total income is less than 100 crore or more than 100 crore. If it is less than 100 crore, you need to just, comply with this requirement. Either you can round off in 100,000, lakhs, millions, or decimal thereof, right? Is that clear? Shall I move forward? Tanisha is asking no, maybe. So Tanisha, prior to 24 March 2021, in IGAP, the word may was there. Okay. But now in IGAP, even it has become mandatory. In Ind AS, it was always mandatory. In Ind AS, it was always mandatory, right? So friends, it's 8:33 now. Let's have a break for 7 minutes. Okay. Then we will start the session. Yes. So friends, we have seen the rounding of guidance, which is also given in the schedule 3, right? So while you prepare your balance sheet, P&L, cash flow, I mean to say Ind AS financial statement, or you audit Ind AS financial statement, please apply this rounding of guidance, right? While preparation or auditing of the financial statement. Question number 13. From where the meaning of the terms given in schedule 3 needs to be referred, like related party, control, associate, property, plant and equipment, etc., etc. Friends, when you read schedule 3, in schedule 3, a lot of terminologies are there. Like uh, if I talk about balance sheet format, in balance sheet format, there is a line item called as biological asset. There is a line item called property, plant and equipment. There is a line item called deferred tax asset. Or when you provide the loans, right? So the loans will come on the balance sheet, face of the balance sheet. Now this loans has to be bifurcated, loans given to outsider, loans given to related parties, right? So these kind of terminologies which have been used in schedule 3, right? What is the meaning of these terminologies? If someone will ask you, okay, loan given to related party, who are the related parties, right? If a company has given a loan to its subsidiary, whether it is a related party or not a related party. So this answer is not given in schedule 3. So whatever terminologies are given in schedule 3, you need to refer Ind AS for the meaning and definition of those terminologies, right? Is that clear? So from where the meaning of the terms given in schedule 3 needs to be referred, so you need to refer Ind AS, right? Refer Ind AS to understand the terms used in schedule 3. Is that clear? Is that clear? Like when you read property, plant and equipment, the definition of PP is given. The definition of intangible asset is given in the intangible asset standard. The definition of biological asset is given in the agriculture standard, right? Likewise. The meaning of related party is given in Ind AS 24. Okay. Is that clear? Is that clear, friends? Friends, a very, very, very important question. Whether any threshold for materiality is defined in Schedule 3. Whether Schedule 3 talks about any materiality threshold, whether that item is material or that item is not material, whether this item has to be disclosed or presented separately, or it has to be clubbed with other item. So whether Schedule 3 prescribe any threshold, answer is yes. What is the threshold? Schedule 3 says that any item or income or expenditure, it only talks about income or expenditure, right? Any item of income or expenditure which exceeds 1% of the revenue from operation or 10 lakh rupees, whichever is higher, needs to be disclosed separately. For example, the company has a 100 crore rupees. The company has a 100 crore rupees of revenue. What is the 1% of 100 crore? 1% of 100 crore is 1 crore, right? So 1% of the revenue, which is 1 crore here, or 10 lakh, whichever is higher. What is higher in 1 crore or 10 lakh? Of course, 1 crore is higher. So any income or expenditure which is higher than what? 1% of revenue or 10 lakh, right? 1% of revenue or 10 lakh, which is higher than this number, it has to be disclosed separately. For example, in this case, the company has spent around 80 lakh rupees in the advertisement expenses. My revenue is 100 crore. My 1% of the revenue is 1 crore. Means any income or expenditure beyond 1 crore needs to be shown separately, needs to be presented separately. So this advertisement expenses is only 80 lakhs. So I can club this advertisement expenses into other expenses as well, right? There is no mandatory requirement to disclose it separately. But if instead of 80 lakh, if it would have been 1.2 crore, in that case, I have to present a separate line item as a advertisement expenses. I'm not talking about face of P&L. I'm talking about notes to accounts. In notes to accounts, even if I'm writing like other expenses, so in other expenses, I have to provide the breakup of other expenses in the notes to accounts, like a separate line item, advertisement expenses, right? Is that clear? Is that clear, friends? So yes, the materiality threshold is given for income and expenditure only, not for balance sheet. Any item of income or expenditure which exceeds 1% of the revenue from operation or 10 lakh, whichever is higher needs to be disclosed. Is this requirement pertains to Ind AS or Schedule 3? This is the Schedule 3 requirement, not Ind AS requirement. In Ind AS, the materiality threshold is not given, it is subjective. We'll discuss that. Friends, any questions so far? Shruti is saying, sir, please explain again with respect to advertisement expense. Shruti, for example, a company has 100 crore of revenue. What is the 1% of revenue? What is 1% in this case? 1 crore, right? And you need to compare those income or expenditure with 1% of revenue or 10 lakh, whichever is higher. So here 1% of revenue is 1 crore. And when I compare with 10 lakh, what is higher? Of course, 1 crore is higher. What does it mean? It means for comparing the materiality, my threshold is become 1 crore now. So any income or expenditure beyond 1 crore, exceeding 1 crore, I have to present separately. I have to disclose separately. I have to present separately in the notes to accounts. Right? Is that clear? Is that clear? So in this case, the advertisement expenses is, for example, 80 lakhs rupees. So I'm not required to show it as a separate line item advertisement expense in my notes to accounts. When I'll give the breakup of the P&L items, I'm not required to show it separately. But had it been more than 1 crore, I need to disclose it separately. I need to present it separately in the notes to accounts. For example, in other expenses, there are a lot of things are there, right? Is that clear? Okay. Yes. Is there any aging related disclosure given in Schedule 3? Yes. Aging related disclosure given in Schedule 3. Yes, aging is given for trade receivables, right? You have to provide a aging up to 6 months, 6 months to 1 year, 1 to 2 year, 2 to 3 year, more than 3 year. You have to provide an aging for trade payable also. You all understand aging, right? And you have to provide the aging of CWIP also, capital work in progress also. Okay. What were the major amendment in Schedule 3 in accordance with the last amendment? What were the major amendment in Schedule 3 in accordance with the last amendment? What were the major amendment? So friends, the major amendment was aging related disclosure, right? Earlier, this was not there. Benami property disclosures. So if the company has a Benami property, means the company has not shown that property in the notes to accounts, but there was an investigation which was made and the CBI or ED found that the company has lot of lot of documents, the company has a lot of land and building which was not disclosed in the financial statement, right? So Benami property related disclosure. Okay. Undisclosed income related disclosure. Undisclosed income related disclosure. So the company has not disclosed the complete income in the income tax return, but when the assessment happened, so it was found that there was some undisclosed income, right? So friends, these kind of disclosures are there in the new revised Schedule 3. So promoter holding, earlier the promoter holding was not required. For example, earlier the requirement was if the company has a shareholder who are holding more than 5% of the share capital, it is required to be disclosed. But now the promoter shareholding is also required to be disclosed, right? When I say promoter shareholding, so even if the promoter has a one share, which is let's say 0.00001%, it is required to be disclosed. Okay. So these kind of disclosures are the CSR related disclosures. So CSR related disclosure were earlier also, but now these are the detailed disclosure. So I would request you to just refer those disclosures. Okay. We are not required to go into the detail. And that is why in the first session, overview of Ind AS, roadmap and applicability and division 2 to Schedule 3, this was combined in the one session. But I believe this Schedule 3 is very, very, very important from the practical life perspective as well. Okay. So friends, please let me know if you have any question on schedule 3. I would be happy to answer, right? Otherwise, I'll move on to the next agenda, which is Ind AS 1. Please let me know if you have any question. Tanisha is asking, sir, is there any disclosure to notes to account requirement which has been introduced as an amendment recently? So the recent amendment was, Tanisha, it was on 24th March 2021, right? And yes, you are right, Tanisha. So the ratios, 11 ratios are there, right? The one of the, again, the major requirement is ratios. So 11 ratios are required to be disclosed. 11 ratios are there. Okay, etc., etc. Okay, I'm not going on each and every detail. Okay, is that clear? Any question on schedule 3, division 2 to schedule 3? So we have started with schedule 3, division 1, division 2, division 3, right? And then we discussed element of financial statement, component of financial statement. Then I have told you what are the guidances which are available for those component of the financial statement. Then I have, briefed you 17 questions, in which I have also briefed you the schedule 3. I have shown you the Hindustan Aeronautic Limited annual report. Then I have shown you the this format of balance sheet, format of P&L, which is including other comprehensive income, format of statement of changes in equity, right? We discussed about rounding of provision. Okay, is that clear? Viraj, is that clear? Vanshika, friends, do let me know if you have any question so far on schedule 3. Any question, anything which you have not understood so far. These 17 questions are the entire fundamental of division 2 to schedule 3. I would say that. Thank you, Shruti. Any questions? Shall I move forward? Okay. If you don't have any question, then let me move forward. And let me start Ind AS 1 now. Ind AS 1 is also a related kind of a thing where we will be talking about presentation of financial statement. Abdul is asking, sir, of shareholders, if holding is more than 1% is reportable or more than 5%. So Abdul, earlier there was only one disclosure, and that disclosure was only talking about more than 5% of the share capital, right? More than 5% of the share capital. But now, in addition of more than 5% of the share capital, if there are promoter, for example, there is a company, right? And the entire equity is widely dispersed with the public. Entire equity is with the equity shareholder. Okay. In that case, whoever the shareholder is, if the shareholder is having more than 5% of the share capital, then this disclosure was required earlier, as well as this disclosure is required now as well. But if the company has a promoter, okay, and that promoter is having a share capital, so let me show you with the help of this example here, and do let me know if my PPT is visible, guys. Do let me know. I have a real life example from Hindustan Unilever Limited. Yes, I hope it is visible. So Abdul, you can see that in this particular case, this is a schedule of detail of shareholding by the promoter. Okay, this is a promoter shareholding disclosure, and you can see that the name of the promoter is there, and even these promoters are holding 0.8%, 2.2%, 1.4%. Doesn't matter. Even if the promoter is holding 0.0001%. So this disclosure is required. This disclosure is only relating to the promoter shareholding. There is no any concept called as 1%. even the promoter is holding 0.0000001%, still the disclosure is required. And what is the disclosure? Name of the promoter, number of shares held by the promoter, percentage of total share, right? The second disclosure is greater than 5% of the share capital. So any shareholder, this disclosure is only for the promoter, which is the new disclosure came in 24 March 2021. The other disclosure is anyone who is holding more than 5%, be it promoter, be it non-promoter, right? So for the promoter, even one share is there, the disclosure is required. For other than promoter, so the second disclosure is more than 5%. If any shareholder who is holding more than 5%, so that disclosure is required, which was the old disclosure. And what was the disclosure? Name of the shareholder, number of shares held by the shareholder, percentage of the shares held by that shareholder into the total shares, right? So these are the two disclosure which is there. This is the new disclosure, right? And in this disclosure, no threshold is there for 5%, 1%, nothing, right? But for other, threshold is there. Any other question on division 2 to schedule 3? Any other question on division 2 to schedule 3? No? Okay. Let me start Ind AS 1. I hope this Ind AS 1 slides are visible. Yes. So friends, as I told you, the title of this Ind AS 1, this is the first standard. This is the first standard of this session. Ind AS 1, presentation of financial statement. So this standard talks about the presentation part. This means we are not going to discuss any recognition, any measurement. We are only going to discuss the presentation part in this particular standard, right? Coming to the agenda of this standard, first of all, we'll talk about the objective and scope of this standard. Then we will be talking about the purpose of the financial statement. What is the purpose of the financial statement? Then what are the component of the financial statement? And I'm sure now you have understood the component of financial statement, right? 5 component: balance sheet, statement of profit and loss, statement of changes in equity, statement of cash flows, notes to accounts, and other explanatory information. Definition, we'll discuss about few definitions. We'll talk about the overall consideration that while preparing or while auditing a financial statement, what sort of consideration you will consider for the true and fairness of those financial statements, right? For example, the financial statement needs to be prepared on a accrual basis. It has to be prepared on a going concern basis, right? What are these? These are the features of the financial statement which you need to consider. Then in this standard, as I told you, Ind AS 1 also provides guidance on the preparation and presentation of financial statement. So this standard also talks about the structure and content of the financial statement, right? So these are the 6 items which we are going to discuss in detail, okay? Objective and scope is a theoretical part. Purpose, what is the purpose of the balance sheet, P&L, cash flow, statement of changes in equity, notes to accounts, we are going to discuss. We will discuss one by one. All the component of the financial statement we'll discuss one by one, right? And of course, few definition we are going to cover. And the key features of the financial statement we will be talking about. And the structure and content we will be covering with the component of the financial statement, right? This is the agenda of this particular standard. Now let's start with the first agenda, which is objective of Ind AS 1. What could be the objective of Ind AS 1? You tell me, please. This standard talks about financial statement, and in financial statement, this standard talks about presentation. So the objective is to ensure the comparability, right? One period financial statement can be comparable with the second period financial statement. The objective is to reflect the financial statement in true and fair view, right? The objective is to enable, right? The objective is to help the user of the financial statement to make all the important information available in the financial statement. These could be the objective, right? As a layman, I can think of these kind of objective. Am I right? I can think of only these kind of objective, guys. Yes. So the objective, the first objective is to prescribe the basis for presentation of general purpose financial statement. The presentation of general purpose financial statement. What is meant by general purpose financial statement? Friends, general purpose financial statement are those financial statements which are available for the public as a whole, which are available for the larger users, which are available for the larger public or user of the financial statement, right? General purpose financial statement are those financial statements which are prepared as per the Indian accounting standard, as per Companies Act, as per other regulatory requirements, right? So friends, let's say Mr. Mukesh Ambani, who is the chairman of the Reliance Group, Mr. Mukesh Ambani asked his CFO that, Mr. CFO, I need a balance sheet where you need to present, liability first, then equity, then your assets, right? Okay. And in your assets, I want you to, instead of PPE, present trade receivable as a first number, then your cash and cash equivalent, then your property, plant and equipment. So Mr. Ambani is suggesting to Mr. CFO of the Reliance, you need to give me the financial statement in this manner. You need to give me the balance sheet in this. Friends, number one, whether that CFO will provide that kind of balance sheet to Mr. Ambani. It is a personal requirement of Mr. Ambani. Whether the CFO will provide him this kind of balance sheet to Mr. Ambani. Whether CFO has any option. Whether CFO has any option to not to provide. If you are an article, if your boss will say that, Viraj, or let's say Tanisha or Abdul, give me this balance sheet in this manner. Right. He's not asking you to sign that balance sheet. He's not asking you to file that balance sheet. He's saying that I need some numbers, I need some statement. Please give me in this manner. Will you provide them? Of course, yes. The CFO will, of course, provide that kind of balance sheet. Yes. That kind of balance sheet to the Mr. Ambani. So very rightly mentioned by Abdul. Very rightly. Yes, Abdul has said yes, but only for internal use. Very good, Abdul. So CFO cannot deny Mr. Ambani. It is his requirement. How can he deny? But yes, CFO will say that, sir, this is for your consumption only. This is not to be circulated. This is not to be shared with any public. This is not to be shared with the or filed with the MCA or SEBI. Right. This is for internal use only. Okay. So the financial statement which has been prepared as per the directions of Mr. Ambani is not a general purpose financial statement. It is a tailored made financial statement. It is a MIS based financial statement. It is a special purpose financial statement. It is a customized financial statement, right? So those financial statements are only for internal use. So on those financial statements, Ind AS are not applicable. Ind AS are applicable only for general purpose financial statement. Is that clear? And what are the general purpose financial statement? General purpose financial statement are those financial statements which has been prepared as per the relevant laws and regulation of the country. For example, in this country for listed company, Ind AS is applicable. So those financial statement needs to be prepared as per Indian accounting standard, right? Ind AS 1 needs to be followed, Schedule 3 needs to be followed, and the structure of Schedule 3, the format of Schedule 3 needs to be followed for preparation of those financial statements. Is that clear? So that financial statement will not called as a as a general purpose financial statement, those financial statement has to be called as a special purpose or customized financial statement, right? I don't know why you guys are saying no. You should say like Abdul, yes, but only for internal consumption, internal use. So Ind AS 1 prescribe the basis for presentation of general purpose financial statement. This Ind AS also ensure comparability with entities' own financial statement of previous periods or with financial statement of other entities. This Ind AS 1 talks about consistency principle, right? Like accounting policy needs to be applied consistently from one period to another. Presentation needs to be remain consistent from one period to another, right? So that the consistency needs to be maintained, so that the comparability needs to be maintained for the financial statement of the company from one period to the another period, right? This standard talks about accrual basis, accrual concept, materiality concept. So, right. So this standard talks about, comparability. This standard ensure the comparability of a same entity financial statement from one period to another period, or one entity financial statement from one entity financial statement with the other entity financial statement, right? With financial statement of the other entities, right? To ensure comparability with financial statement of other entities as well, right? For example, if everyone will not follow Ind AS and will follow their own format, probably two companies in the same sector, financial statement will not be comparable. Bharti Airtel financial statement cannot be compared with Vodafone Idea. Why? Because if they are following their own format, so they will not be comparable. But of course, these are the listed companies. They have to follow Ind AS, they have to follow Companies Act, they have to follow Schedule 3. So you can see that irrespective of the size of the company, irrespective of the nature of the company, irrespective of the group, their first line item, their balance sheet should start with non-current asset, and their first line item is the property, plant and equipment, right? So this is how this ensure comparability. To set, what to set? To set overall requirement for the presentation of the financial statement, right? So what is the overall requirement for the presentation of the financial statement? This standard also prescribes that. What is the guideline for their structure? This standard also prescribes that. And what is the minimum requirement for their content? Like, as I told you, the format is given in Schedule 3 for the balance sheet. But the content, this standard says that the minimum content, minimum line item on the face of the balance sheet should be these line item. Para number 54 of Ind AS 1 says that these should be the minimum line item on the face of the balance sheet. So for example, if you are preparing the balance sheet, you are referring the format given in Schedule 3. So you need to check the line item also and compare with the Ind AS 1. If Ind AS 1 has a line item, for example, asset held for sale, but Schedule 3 does not have this line item, in that case, you have to present asset held for sale on the face of the balance sheet separately, right? As Schedule 3 itself says that my requirement is the minimum requirement. If Ind AS has more requirement, Ind AS has additional requirement, you need to follow that additional requirement. So this is already given in Schedule 3. Right, friends? Any doubt on the objective, friends? Now coming to the scope of the standard. While discussing the scope, this Ind AS is applicable in preparing and presenting general purpose financial statement in accordance with Ind AS only. So Ind AS 1 is not applicable to Mr. Ambani's balance sheet. Mr. Ambani's balance sheet means the direction which he was giving it to the CFO for preparation of balance sheet. It is not applicable to that. So this Ind AS 1 is only applicable to those financial statements which are prepared as per Ind AS, right? Which are the general purpose financial statements. So that is number one. Okay. Sorry. Number two, sir, whether this Ind AS 1 as the name and title is presentation of financial statement Whether this Ind AS 1 also takes care of any measurement recognition part? Answer is no. The measurement and recognition part is not covered by this Ind AS, right? Other Ind AS set out the recognition, measurement, and disclosure requirement for the specific transaction and other events. For example, this Ind AS 1 says that financial statement needs to be prepared on accrual basis, going concern basis. This Ind AS 1 says that in the balance sheet, property, plant, and equipment has to be a separate line item. Ind AS 1 says that the depreciation on PPE has to be shown separately, presented separately in the face of the P&L, right? This Ind AS 1 does not tell you when you have to do the revaluation model, at what is the measurement of PPE, right? When an item needs to be recognized as a PPE, this standard will not tell you these things, right? Who will tell you these things? These things will told by will tell by these things has to be told by Ind AS 16, property, plant, and equipment. This standard will only tell you that deferred tax asset, deferred tax liability has to be presented as a non-current item on the face of the balance sheet. This standard will not tell you what are the relevant disclosure requirements for deferred tax. This standard will not tell you that how to measure deferred tax, when to recognize deferred tax asset. Who will tell you? Ind AS 12 will tell you, right? This standard says that, the disclosure requirement of all the Indian accounting standard needs to be followed. All other Ind AS needs to be followed. This standard will not tell you what are the related party disclosure. Who will tell the related party disclosure? Ind AS 24. This standard will not tell you actuarial disclosure. Who will say that? Ind AS 19 will say that. This standard will not tell you contingent liability disclosure. Who will say that? Ind AS 37 will say that. This standard will only say that, you need to prepare and present the financial statement in accordance with all Ind AS. You need in the notes to accounts, you need to comply with the disclosure requirement of all Ind AS. So this is kind of a statement which is made by this Ind AS. This is a very fundamental Ind AS. This is I would say, very important Ind AS. It's a pillar Ind AS for preparation of financial statement. I hope you guys have understood. Is that clear? Number 3. It is not applied to structure and content of condensed interim financial statement under Ind AS 34. Friends, you are aware that listed companies are presenting and preparing the results on a quarterly basis, right? And these listed companies are preparing their financial statement on a quarterly basis, right? So friends, there are two things in any financial statement. One, general features. Second, structure and content. So friends, in our old AS 25 was there, and AS 25 was taking care of interim financial reporting. AS 25 was taking care of interim financial reporting, right? And in interim financial reporting means when you are preparing and presenting your financial statement, not for a full year, for a period less than a year, like quarterly, half yearly, 9 months. In that case, condensed financial statement, condensed means small set of financial statement, may be prepared as per Ind AS 34 or as per AS 25 in AS. So this Ind AS 1, as far as structure and content is concerned, this Ind AS 1 is not applicable to the quarterly financial statement. But as far as general feature is concerned, this Ind AS 1 is equally applicable to the interim financial statement. Sir, what does it mean? General feature means doesn't matter if you are preparing a quarterly financial statement or a yearly financial statement, you need to prepare your financial statement on an accrual basis. So this accrual basis is a general feature. Doesn't matter is it a quarterly financial statement or yearly financial statement, you need to prepare your financial statement on a going concern basis. What is that? That is a general feature. Okay. So as far as quarterly financial statement are concerned, interim financial statement are concerned, structure and content of Ind AS 1 is not applicable, but general features requirement of Ind AS 1 is equally applicable. Number 4. This Ind AS 1 is not only applicable to standalone. This Ind AS 1 is equally applicable to consolidated financial statement as well, right? This Ind AS 1 is equally applicable to the presentation of consolidated financial statement. Like Schedule 3 requirement is equally applicable to the presentation of consolidated financial statement, this Ind AS 1 is also equally applicable to the requirement of consolidated financial statement. I hope this scope part is clear to all of you. Please let me know if you have any questions so far. Friends, please let me know if you have any question. Any question? Okay, let's move on if you don't have any question. What is a general purpose financial statement? We talked about this. General purpose financial statement means those financial statements which have been prepared as per Ind AS, right? As per the relevant gap, and which meet the need of the entire user of the financial statement, right? Why? Because, for example, again, continuing with the example of Mr. Ambani, Mr. Ambani is asking some specific information and he is getting that. But let's say I am the shareholder of Reliance. Can I ask this kind of information to CFO? Answer is he'll not provide us. So that is why the general purpose financial statement requirement is in line with the requirement of all Ind AS and companies, right? Is that clear? Sir, what is Ind AS? Ind AS are Indian accounting standard, which are converged with IFRS. Ind AS are the converged version of IFRS applicable to India, and these Indian accounting standard are prescribed under Section 133 of Companies Act 2013. Please write down. In Section 133, AS as well as Ind AS both are notified. In this Section 133, AS is also notified in Ind AS 1 in Section 133 of the Companies Act. AS is notified as well as Ind AS is also notified, right? So Ind AS is also there, right? Please write down so that you will not get confused. So in Section 133 of Companies Act, AS as well as Ind AS both are notified. Friends, I hope you are enjoying the session. I hope you are understanding what I'm trying to convey. You found the session informative. Are you enjoying that or not enjoying? Of course, this is a fundamental standard. Yes. So a lot of things you will be, you will just make out that, we are doing our revision, which we are aware of. Okay. But probably this is a good time to refresh the old concepts as well, right? Yes. Now coming to the third definition of materiality. Again, very important. Materiality. What is meant by materiality? Friends, I'm sure that being a CA final students, you guys have undergone at least some period of articleship. And I'm sure that whenever you have been to the client, at times client and the auditor talks about materiality, right? For example, the company don't want to apply a particular accounting treatment to a particular item. So probably auditor will say that, okay, leave it because this is not a material item. This is not material. For Reliance, for example, Reliance has a lakhs and crores of balance sheet. Lakhs and crores of balance sheet. So hardly matters if they have an item worth of 1 crore rupees. Hardly matters to anyone. It is not material to Reliance, right? So if I'll just get to know that Reliance accountant has forgot to record a salary expense of 1 crore rupees. Whether it impacts the stock market, whether it impacts me, whether it impacts auditor, answer is no. They have 35,000, 40,000 crore of profit, right? How does this single crore, this 1 crore is 1 rupee for them. Their rounding off is in crores. It's just like 1 rupee. You have 35,000 rupee and 1 rupee has been lost. Will you cry for that? Of course, you will search that, but will you cry for that? Answer is typically no. So friends, in the financial statement, materiality plays a very important role. And why materiality is important? The company is preparing the financial statement, and this financial statement is the outcome of what? You start with accounting entry, journal entry convert into the ledger, GL convert into trial balance converted into the financial statement. So you have millions and billions of transactions, and you are preparing the financial statement for the full year, right? And you have the limited time frame for that. For example, for a listed company, they have to come out with their yearly results within 60 days from the end of the year. So friends, again, materiality plays a very, very important role, right? So that you will focus more on material item and you will less focus on the immaterial item. Okay. Let's say if materiality concept will not be there, being an auditor, how will you audit? You are auditing the financial statement of a company for the full year by just spending 1 month or 2 months maximum, right? 1 month or maximum 2. Now, what happened? If you will spend majority of your time in assessing the immaterial items, probably you will not be able to devote time on the material item, which are material and which has a major impact on the financial statement, right? Right. For example, let's say there is a company and the company has a balance sheet size of 100 crores. Out of this 100 crore, the large chunk of the balance sheet is sitting in property, plant and equipment. 85 crore belongs to property, plant and equipment. And this entire property, plant and equipment is funded by a loan, by a bank loan. So on the liability side, the 85% or 80% chunk belongs to the liability, borrowing, right? So you have 100 crore of balance sheet, 85 crore is in PP, 85 crore is in borrowings. Friends, what is the first item which you will consider for your auditing? If you will cover this at least 85 crore, the one item in detail, or I would say two items in detail, one is borrowing and one is PP, probably you will be able to cover 85% of your balance sheet or from the one side, right? So when you plan your audit, probably you will plan even on the basis of materiality. What are the material item? What are the material transaction which we need to focus on, right? So friends, materiality is a very wide concept. And again, this materiality is a very important, not only from the management perspective, from the auditor perspective as well. Sir, is there any threshold which is given for the materiality in Ind AS? Answer is, in Ind AS, there is no materiality threshold is given. Materiality is a subjective term, right? But it says that what is meant by material? It says that information is considered as a material if omission, misstatement, or obscuring can impact the decision-making capacity of the user of the financial statement. Sir, what is meant by omission? You tell me what is meant by omission. Omission means if a company has forgot to record something, it will impact the decision making of the user of the financial statement, right? So an information will be considered as material if the omission, misstatement, or obscuring can impact the decision making capacity of the user of the financial statement, right? For example, there were two companies, similar company in the similar product. Viraj is an investor, okay, or Abdul is an investor. Let's. What happened? Abdul wants to invest 100 crores in one of that company, company A or company B. When Abdul was reading the financial statement, Abdul A found that, there was no contingent liability in company A and there was no contingent liability in company B. In company A, actually there was no any contingent liability, but in company B, the accountant has forgot to disclose the contingent liability. So everything is same. The turnover is same, net worth is same. Now Abdul is indifferent. Abdul is not able to finalize which company he should go, whether company A or company B. Friends, had this contingent liability disclosed in company B, for example, the contingent liability is worth 50 crore rupees. Had this contingent liability disclosed in company B, don't you think that it will help Abdul to take a decision? Yeah. Don't you think this omission of contingent liability disclosure can impact the decision making capacity of the user of the financial statement had it been presented? Of course, yes. In that case, Abdul, when compare those two financial statement, Abdul found कि अच्छा company A में liability नहीं है, but company B में liability है. So it means there is a potential risk in company B. So probably Abdul would like to invest in company A, right? This is how this thing is there. Am I right? This is how it is planned. So friends, this is the meaning of omission. Or let's say the accountant was aware about this fact, but still he has misstated. Means either he has disclosed the contingent liability, but the quantum was very small or immaterial what he has disclosed, or he has presented in a manner, that someone has perceived that, oh, this is just a disclosure, this is actually not a contingent liability. So this is a misstatement. Or obscuring. What is meant by obscuring? Obscuring means to scatter the important information into bits and pieces and different places so that it will loses its value. Let me give you an example. There is a small kid. He is studying in class 8 or class 10. So when he was sitting in examination, he found that the paper was very tough and he was not well prepared. Okay. You know what he did? He started telling his father, so I didn't got a good time to prepare for my examination. Okay. The teacher was not good. Even in the school, the syllabus was not covered. The tuition teacher has not covered the entire syllabus. So he has started, making the grounds. Then when he came from the exam, he know that my result will not be good. So he is saying that, oh, Papa, 50% of the student has just walk out from the exam in between, because the paper was very tough. Even the invigilator was saying that the paper is very tough. It is out of syllabus, this, that. Few days before the result, he started saying that I don't think the result will be good. Even the teacher was saying that this time result will be very bad. So it's not just because of student, it's because of this out of syllabus, the thing, this, that, right? When the result came and it was not good, he was telling his father, majority of the people got fail. And even so, my number is good, but also I am not able to crack it. Do you understand this? So the outcome is that student has got failed. That is the outcome. This is the information. But this information has been scattered in such a way that it loses its value. Had this student never been made a ground and never been talked to his father 4 or 5 times about this, probably when he will only say that I got failed in the exam, it makes a huge impact in the mind of his father. But now when he has made a series of ground, it is not impacting that way in comparison to the way it should have been impacted. Are you getting me? So friends, obscuring means to scatter the, so आपको एक information disclose करनी है. You are saying that okay, I'm disclosing. But instead of disclosing in a single notes to accounts, in a single disclosure, you are just disclosing it into bits and pieces, so that the user will not be able to connect the dots and user will not be able to make out what is supposed to make out. This is known as obscuring, means spreading the information in a different bits and pieces. Is that clear? So this subjective definition This subjective definition of materiality is there, and it says that an information will be material if the omission, misstatement, or obscuring could impact the decision making capacity of the user of the financial statement, right? Okay. Now let's come to the purpose of the financial statement. What is the purpose of the financial statement? The purpose is to provide a structured presentation, right? Otherwise, there are billion of transaction, million or crores of transaction. But you can see the balance sheet is very structured. It's a one pager or two pager. P&L is one or two pager. Then there is a cash flow, statement of changes in equity, and there is a well structured notes to accounts, right? It starts with accounting policy, corporate information, basis of preparation, then the breakup of balance sheet item, breakup of P&L item, then there are other disclosures. Okay. So the purpose of the financial statement is to provide the structured presentation, of financial position, right? Who gives the financial position? Balance sheet. The balance sheet provides the financial position. The balance sheet provides the financial position. Financial performance. Who gives the financial performance? Your P&L. Your P&L and statement of changes in equity. P&L and SOC. Statement of changes in equity, right? Statement of changes in equity gives the shareholder performance, and P&L gives the your company's performance. Okay. And your cash flow, friends, your cash flow as well. This will give you a liquid performance, your cash performance, liquid performance, right? This gives you the liquid performance. Okay. So financial statement provides a structured presentation. Balance sheet gives a financial position. Profit and loss and statement of changes gives a financial performance, and cash flow gives a liquid performance. And notes to accounts, of course, it provides the more explanation to this financial position, financial performance, and liquid performance, right? Is that clear? Now, what are the components or complete set of financial statement? Of course, balance sheet, statement of profit and loss, which includes a new section, other comprehensive income, which we will be discussing in the next class. Other comprehensive income. Statement of changes in equity, right, which we have already discussed. This statement of changes in equity is nothing, it's a movement in equity, share capital, and reserves and surplus. Then your cash flow statement, of course, it's a statement of cash flows, right? Then your notes to account, which includes accounting policies and explanatory notes. And of course, we need to provide comparative information to all the set of financial statement. Means comparative balance sheet should be there, comparative P&L should be there, comparative statement of changes in equity should be there, comparative cash flow should be there, and in the notes to accounts, all the comparison needs to be provided in the notes to accounts, right? All the comparison needs to be provided. Right, friends? So this is the component. This is the component of the financial statement. So as I told you, in this statement of changes in equity is a new component, and in statement of P&L, there is a new section called as other comprehensive income. Friends, there is one more requirement. You know, in your normal financial statement, you have only seen two balance sheet. Two balance sheet means current year, comparative year. But do you know the third balance sheet is also required in Ind AS and IFRS? So the third balance sheet is also required in Ind AS. And what is the third balance sheet? So friends, a balance sheet at the beginning of the earliest comparative period is required. So friends, for example, if you are preparing the financial statement for financial year 22-23, if you are preparing the financial statement for financial year 22-23, what is the balance sheet date? The balance sheet date was 31st March. 31st March 2023 is the balance sheet date. Am I right? This balance sheet date was 31st March 2023. Friends, what is the comparative year? If you are preparing the financial statement for financial year 22-23, the balance sheet date is 31st March 23, end of the financial year. But what is the comparative period? FY 21-22. 21-22 is the comparative period for 22-23. And what is the balance sheet date? The balance sheet date is again 31st March 2022. So it is 2020, right? It is 2022. 31st March 22. And the comparative period is financial year 21-22 is the comparative period. Friends, what is the opening date? What is the opening date of the comparative year? What is the opening date of the comparative year? What is the opening date of the comparative year? Yes, you are right. 1st April 2021. Right? पिछला पूरा साल कौन सा होगा? 21-22. और उसकी फर्स्ट डेट कौन सी होगी? 1 अप्रैल 2021. 1st April 2021 is the first date, opening date of the comparative year. So now Ind AS 1 says that, and in not only Ind AS 1, even Ind AS 8 says that, Ind AS 1 and Ind AS 8, you need to provide a balance sheet as at the beginning of the earliest comparative period. So earliest comparative period will always be the last year, which is 21-22, and you need to provide the opening balance sheet, which is 1st April 22. 1st April 21. 1st April 21, right? When you are required to provide the third balance sheet. So instead of 2 balance sheet, when you will give 3 balance sheet, you are required to provide the third balance sheet, which is balance sheet as on the opening date of the comparative year in 3 circumstances. What are the 3 circumstances? Number 1, when the company has made a prior period error. So when the company is rectifying the prior period error. Number 2, when the company is changing the accounting policy. So company has to take the impact on a retrospective basis. Or when the company is doing reclassification. So when there is a correction of prior period item, when there is a change in accounting policy, and when there is a reclassification in the financial statement item. In these three cases, it is required to present a third balance sheet. Friends, I'll explain this concept with the help of an Excel file, and then I will also explain this concept with a real life example, right? If you have not understood so far, don't worry. Okay, I'm going to discuss this with the help of an example, and please let me know if the Excel file is visible, guys. Please let me know if the Excel file is visible. Is it visible? Yeah. Case study on third balance sheet, right? So this case study I have taken for correction of error. Right? For correction of error. A Limited purchased a machinery for rupees 1 lakh on 1st April 2016, having a useful life of 10 years. What is the date of purchase? Date of purchase was 1st April 2016. The actual cost of the machinery was 1 lakh rupees. The life was 10 years. The accountant has wrongly passed an entry for rupees 10,000 instead of rupees 1 lakh. So accountant has purchased a machinery for rupees 1 lakh, and he was supposed to pass an accounting entry, machine account debit to cash account 1 lakh. But he has wrongly passed an accounting entry by 10,000 instead of 1 lakh. So he has passed an accounting entry, machine account debit to cash account 10,000. And due to this, what happened? The machine was understated. Machine was understated by 90,000, and the cash was overstated by 90,000. The cash was overstated by 90,000. Okay. Machine was understated by 90,000. Machine was understated by 90,000 and cash was overstated by 90,000. This is what, what happened with this transaction. Okay. Right? यही है ना, compensating error हो गया ना, बैलेंस शीट तो टैली होगी बट कैश ओवर स्टेट हो गया एंड मशीन अंडर स्टेट हो गई. Now what is the impact of this error? And this error was found by Tanisha while auditing the financial statement of A Limited for financial year 2021. She got this error, but she found this error after 4 years, right? Suggest the correct accounting treatment in light of Ind AS 1 and Ind AS 8. First of all, friends, let me give you the year-wise impact. What has been done here? There are 4 years, right? There are 4 years. 16, 17, 17, 18, 18, 19, 19, 20. These are the 4 years where the error has happened. And now there is a last year, which is 2021. So in this year, this error got found. So of course, the financial statement for this year is yet to prepare, yet to publish. So of course, FY 2021 will be all right. But what about the last 4 years? What about the last 4 years? So friends, if everything would be all right, had this error not been happened, what should be the depreciation which is required to be charged in 16-17? 1 lakh divided by 10. What should be depreciation in next year? What is in the next year? And what is in the next year? 10,000 depreciation was supposed to be charged everywhere. But what has happened? Since the actual cost which was booked to machinery was 10,000 only, so instead of 10,000, the depreciation which was charged is only 1,000, right? 1,000 in the last 4 years. Am I right? It means in the last 4 years, every year 9,000 less depreciation has been charged. 9,000 less depreciation has been charged in this entire 4 years. Right, friends? Any doubt so far? Do you have any doubt so far? No? Now, what to do in this circumstance in Ind AS? Had this been accounting standard, life was very simple. In the current year, whenever you found an error, doesn't matter. Till which the period the error belongs to, doesn't matter. Wherever you found the impact of the error, just take the impact in the current year as a prior period item. But in Ind AS, the treatment is quite different. It is not prior period item. It says that if there is an error, you need to correct the error in your comparative number, and you need to provide the third balance sheet, which is opening date of the comparative, right? And from the date of the error to the opening date, take the cumulative impact and present the opening of the comparative period corrected numbers, right? 3 balance sheet you need to prepare. I'll show you that also. So friends, if the current year is 2021, what is my balance sheet date? It is 31st March 21. What is my comparative year? 1920. What is my comparative balance sheet date? 31st March 20. What is my opening of the comparative? It is 1st April 2019. 1st April 2019 is my opening of the comparative, right? 1st April 2019 टेक्निकली मतलब 31 मार्च रात को 12 बजे के. 31st March 19 is equal to 1st April 19. But the only difference is 31st March 19 number which was already filed and published, it was a wrong number. 1st April number should be the right number, corrected number, right? So let's understand the impact now. Friends, in 1st April 2019, there was already 3 years which has gone. And 27,000 rupees has been less charged in the P&L. It means your retained earning is overstated by 27,000. You need to take an impact of 27,000 in your retained earning also. So let's compare the net block first. Balance of machinery as on 31st March 2019. If everything was right, your gross block should be 1 lakh. Your depreciation for 3 years should be 30,000. Your correct net block should be 70,000, right? And your existing net block is 10,000. Your accumulated depreciation is 3,000. So this is not net block, this is gross block. And your wrong net block is 7,000. It means on 31st March 19, your PPE balance is lesser by 63,000. Is that right? It should have been 70,000, but it is 7,000. So PPE has to be debited by 63,000 to make it correct. Friends, in the current year, you are not required to change your past financial statement. Please try to understand. You are only correcting your comparative number in the current financial statement, in the current year financial statement. You are not changing your comparative number. Is that right? Sorry, you are not changing your past filed financial statement. You are only changing your comparative number in the current period of financials. So friends, in the current year, with the date of 1st April 19, you will pass an accounting entry machinery account debit by how much? Machinery account debit by 63,000. And of course, on the balance sheet date, your cash is overstated by 90,000. You have to credit 90,000. The debit, the difference is 27,000. It will go to retained earning. You remember which 27,000 is this? This is the lesser depreciation which was charged in 3 years. Are you clear about this entry? Are you clear about these numbers? Any doubt? Any doubt on this number, on this accounting entry? No? Very good. In the next year, in 1920, what will happen? Now you have corrected your opening balance. Now in 1920, what you will do? You will pass a depreciation account debit to machinery account by 9,000. As simple as that. Simple. How will you present this in the balance sheet? In the current year, of course, number will come, right? But on the 1st April 2019, you will add 63,000. You will debit 63,000 in the PP. You will reduce 90,000 in your cash. So net impact is your asset side will get reduced by 27,000. Your liability side will also get reduced by 27,000. Since you have passed this accounting entry as an opening balance, so this will flow in the next year also. It's a balance sheet number, na? It's the balance sheet number. So what happened? When you provide the 9,000 rupees depreciation extra in 1920 comparative, so your machinery will be, the difference in machinery will be 54,000. Cash will, of course, 90,000. Why 90,000? Because your 31st March 20 balance is also overstated. So when you have passed an accounting entry of 90,000, it will flow to your 31st March 20 as well. Right? And here retained earning will be 36,000 lesser. So this is how this impact has to be taken. Is that clear? This is how this impact has to be taken. Sir, whether any company has prepared this third balance sheet? Any company has prepared this third balance sheet? Yeah. Let me show you the ONGC. Let me show you the ONGC financial statement. I hope this ONGC balance sheet is visible. I hope this ONGC balance sheet is visible. Is it visible? ONGC balance sheet? So let me show you. ONGC is a Maharatan company. It's a PSU. It's a listed company. And I'll show you. They have given this third balance sheet. Okay. Why? Because they have changed the accounting policy. The treatment is same. Or in case of correction of error, you can see that 31st March 20 current year, 31st March 2019 last year, and 1st April 2018 opening of the comparative year. And you can see that there is a star mark on both these dates. What is the meaning of this? What is the meaning of the star mark? The meaning of the star mark, let's see that. Restated refer note number 54. Right. Let's go to the P&L. In the P&L, there is no third P&L because there is nothing called as an opening of the P&L. Balance sheet can be the opening date, but P&L cannot be the opening, right? Because P&L balances are not carried forward. You can see a star mark in the last year P&L. Why? Because again, this last year comparative is also restated. In the cash flow, again, there should be a restated cash flow, right? You can see that there is a star mark in the last year cash flow statement as well. Now let's go to the note number 54. Okay. In note number 54, you can see that disclosure as per Ind AS 8 and Ind AS 1. Same treatment is there in Ind AS 8 and Ind AS 1. Uh, you will have a session on Ind AS 8 and Ind AS 10 as well. So you will find the same treatment there, right? You can see that in accordance with Ind AS 8 and Ind AS 1, the company has retrospectively restated its balance sheet as on 31st March 19 and 1st April 18, beginning of the comparative period, and statement of P&L for 31st March 2019. And they have given the reason why they have done this restatement and why they have given the third balance sheet. Apart from that, they have also given the reconciliation. It is required by Ind AS 8, right? What was the previous number? What is the adjustment? What is the restated number, right? They have given this also for last year and for the opening of the last year. And same for the P&L and cash flow. They have given what is the previously reported, what is the adjustment, and what is the restated number. Even for earning per share, they have also given, right? For cash flow, they have given in the same manner. And you can see this note reference number. And for every impact, they have given the explanation to it. Every impact, they have given the explanation to it, right? So friends, this is the ONGC balance sheet for financial year 1920, where I have seen you the real life example. The Hindustan Aeronautic Limited balance sheet, which I have shown you for financial year 22-23, you will find they have also given the third balance sheet. Why? Because they have corrected an error and it was a material error, right? I hope you guys have got a comfort after looking at this ONGC balance sheet as well. Yeah. Yeah. I hope you have understood this. You have understood this. So what we did, हमने क्या किया? 31st March 19 तक का जो भी गलती थी, जो भी एरर था, वी हैव करेक्टेड दैट. एंड फ्रेंड्स, अगर हमने सही सब कुछ किया होता, if the correct 1 lakh needs to be followed, what should be our net block? Our net block should be 70,000. अभी कितना है? 7,000. तो कितने का एरर है? 63,000 का एरर है ना 31st March 19 को. तो इस 63,000 से हमने मशीनरी को डेबिट कर, कैश को क्रेडिट किया, 90,000 से 27,000 से रिटेन अर्निंग को डेबिट कर दिया, राइट? एंड दिस इज हाउ दिस इंपैक्ट विल फ्लो इनटू द बैलेंस शीट. This is not the complete balance sheet. I am saying that these line item will be impacted by these amounts, right? Is that clear? Sir, do we need to change our income tax return also? Friends, this standard only talks about accounting treatment, not income tax. गलती तो पहले भी होती थी ना अकाउंटिंग स्टैंडर्ड में, तो जो आप इनकम टैक्स में करते थे वैसे ही आप अभी भी करो, राइट? This standard talks about how to treat in case of correction of error, in case of change in accounting policy, how to treat these items, okay? Second, sir, if the error is not material, then what to do? For example, Reliance accounted forgot to record an expense of rupees 1 crore. What to do that case? In that case, if it is not material, it will not be considered as an error. What does it mean? Means you are not required to restate your comparative number. You are not required to give the third balance sheet. You are not required to give any reconciliation, any notes to accounts. You are just required to take that entry into the current year. Like this expense was a current year expense. That's all, right? So this standard only talks about the material thing. If there is an error which is material, the accounting policy impact which is material, you are required to restate your comparative. You are required to give the third balance sheet, right? So this is what is required by this standard. Is that clear? The same thing you will again repeat, you will again understand, you will again repeat in Ind AS 8, this accounting treatment. Right? So Tanisha, in Ind AS 1, the disclosure requirement is not there. In Ind AS 8, the disclosure requirement is there. And what is the disclosure requirement? Disclosing the reconciliation. What was the earlier number? What is the impact? Like this 63,000, 27,000, 90,000. These are the impact. And what is the final number, right? For balance sheet, P&L and cash flow. And what are the reason for restatement? This is required as per Ind AS 8. Okay. So friends, again, coming back to the PowerPoint presentation, friends. So this component or complete set of financial statement I have covered. So it's 10 a.m. now. So now I want to conclude the session. So before that, I need to, I need to check if you have any question. I will be happy to discuss that in the next 1 or 2 minutes. After that, I will call out the session for the day. Friends, I hope you have enjoyed the Schedule 3 session and the last 1 hour on Ind AS 1. There is no any question. If you have any question, then day after tomorrow, we will have the second and last session on Ind AS 1. So you can ask just in the beginning of that session also. Thank you so much, guys. So stay happy, stay safe. Bye-bye. Take care.